Hello, everyone. How's it going? Yeah, ETC is really special event for me personally because I remember it was 2020 and we built and launched the first version of the Aave protocol in January, and then later in March in Paris, ETC was our first big event. And at that time, quickly after ETC, COVID happened, and I remember the excitement of what we launched back in 2020 with Aave, and how big moment it was for our team and the whole DeFi space. And when COVID happened, we were in a very interesting environment where there's interest rates were down at a zero. A lot of people were spending time in their homes because you couldn't get anywhere else, and people were concerned about their financial future. And at that point, one very big movement happened, and that was the DeFi summer. So for some, DeFi summer was about the amazing innovation that we were building on Ethereum, next generation of financial infrastructure. For some, it was basically about farming different kinds of food coins, if anyone remembers. But for me personally, it was about seeing a new community being born, and that was the DeFi community. And now we're almost a decade, or like a little over half a decade on building DeFi, and it's incredible to see how much the space has grown since then and over the years, and how many builders there are here. And I can bet that building DeFi today is it's a little much more easier with all the tooling and all the knowledge we have today, but also the opportunities that we can build. And some can argue that DeFi has a lot of primitives and a lot of infrastructure that is already built and exists, and that is a good thing because it also shows a baseline liquidity and resiliency that comes from DeFi, but a lot of the space is still in a very early stages. DeFi has shown its resiliency, but we're still very early on what could actually what the future could actually hold. And I want to chat about assets today and a direction that DeFi can take over time, and how we can scale DeFi beyond the existing use cases and actually use DeFi to solve some of the real-world problems and create a better cost structure than what we have in traditional finance, and close some of the funding gaps that exist today. I personally think that existing native assets will grow significantly, and that will be a very core of decentralized finance. But in the moment where RWAs are increasingly coming on chain, and liquidity is forming in DeFi, there's new opportunities actually to reuse this liquidity and find a lot of interesting use cases. Yeah, I want to first talk about assets in general. When you look at the existing ways of how finance happens, or financial assets are created, there's a lot of assets that are based on some sort of limitation, and that limitation creates a scarcity. So real estate is a great example of scarcity assets. So there's an asset or demand to live in a certain area because of jobs, environment, schooling, and so forth. And this creates demand, and this creates an asset that I like to call a scarcity asset. There's other examples where you have assets that there's limitation on the supply. And I think the traditional finance is sort of backing the scarcity economy. And what it means is that if you look at the banks of today, the investment banks or high street, Wells Fargo's, the bigger banks and JPMs, a lot of their business is based on lending against real estate, mortgages, commercial loans, funding companies that produce scarcity assets such as fossil fuels, oil and gas in general. And that creates a sort of asset class that is one way or another backing the existing traditional financial ecosystem. And why I think that now this topic is important is because capital allocation has always been a big part of technology and building societies in general. Capital allocation really dictates what gets built and what doesn't get built. We know about capital allocation in DeFi and in our space in general because we build technology, and technology has a cost towards it. It has a capex that needs to be funded, and the outcome then results whether that was a good technology or a viable technology. So if you look at just back in history, I didn't come here to give a history lecture, but I do think there's a really interesting observations from the past. So if we look, for example, that's how our agriculture was funded in the first place, there was credit involved. If we look at how the transformation of societies, for example, by building railroads, happened. So we had a really significant agriculture society that also generated wealth. Wealth wasn't that important at that time, but significant amount of wealth. And when actually industrialization happened, railways needed to be built, factories needed to build, and industrialization was one of the big transformations of our civilization. And there was a big capital allocation from agriculture side, from the owners, to fund these railways and fund industrialization, both in the UK and US, later globally. You have some other interesting examples, for example, how technology has been always played a role here of this transformation. So electrification is another one. JPM basically funded both railways, consolidated a lot of railway companies, consolidated companies what became later General Electric, and also funded Edison and even Tesla. So finance has been always part of funding technology that then also is part of transforming our civilization. I think now we have a new transformation happening as we speak, and I think we're moving towards abundance. Now, to understand a bit what abundance means, we have to sort of define it. So, and it's something that a lot of people talk about, and I think abundance is about opportunity and distributing the opportunity equally, right? So something that is abundant today wasn't maybe decades ago or centuries ago. A very great recent example is internet connection. So when I grew up, I remember the times when the internet connection was so slow that it took maybe a few minutes to load one single web page, and you can imagine how long it took to actually get a internet speed to play some sort of a video game online like Counter-Strike and so forth. So what is interesting is that when internet came, it created this abundance of information. So you didn't have to go to, you didn't learn purely from your peers and parents, and you didn't have to go to a library to learn about something on own books. You could access information globally. And water is the same. So water is another great example. So we feel that we have abundance of water in the Western world, although there is some actually pressures on the water system, but you have a sort of abundance in the Western world. But if you go to another part of the world, you don't have the same equal access to water. So abundance is also something that is not equally distributed yet. And I think that as time passes, certain things become more abundant. And for this transformation that we have now for the next 50 years or so, the most important infrastructure and the most important resources are going towards abundance. So today we're witnessing abundance of intelligence. So with AI, anyone has at their hands enormous amount of intelligence. You don't anymore have to be a software engineer to develop and being able to develop software. And similar examples on anything we do actually in the digital world. So we are already experiencing the abundance of intelligence. We're also going to experience abundance of labor as well with robotics. So at some point, we have enough labor that we don't have to work ourselves in the society. We are experiencing also abundance of computation, which is part of empowering AI, but abundance of energy. And this is really interesting because energy is powering the whole infrastructure of seeing more actually utilization, whether it's AI, GPUs, or any sort of industrials. And in certain places in the world already, solar power is the cheapest energy. So that can be in California, in Texas, and different parts of Europe during the daytime. And obviously the next part of energy is also batteries, being able to harvest cheap energy during the day and release that during the night and having very low cost of energy. And when you have very low cost of energy, that means you have cheaper production and also you have cheaper cost of manufacturing as well. And what it means for example, food and water production is that you can have year-round access to clean water with desalination and solar. You can also create a completely new types of food industries as well. So it's a really exciting next decades that we are going towards. And I think that these different categories of abundance technologies create abundance assets. And so abundance assets, they sort of follow the typical economics of scale cost curve. So something happens on a very high technological risk, and over time as the production increases, competition increases, the cost of production drops significantly down. And solar PVs is a really good example of these cost curves. It was very expensive to have solar panels. They cost tens of thousands of dollars a few decades ago, and now fraction of that price. It's incredible cheap at the moment. Computation is a great example of that as well. Sequencing DNA, which costs hundreds of millions and costs thousands today, and actually hundreds, and going to cost even more, less in the future. So production increases, the cost collapse, and that increases the accessibility. And that is the whole recipe of these abundance assets, but this applies to any production when it starts to scale. And when you compare it to the scarcity assets, one really interesting part about abundance assets is that they do have a really high capex, meaning that it requires a significant investment to build some of this infrastructure. But once that infrastructure is built, the operation costs are significantly low. And as time passes, the cost curves are going to decrease. So it's a very different type of an asset class that we've sort of backed our existing financial, traditional financial infrastructure compared to mortgages, commercial property, and so forth. And I think when you look at DeFi today, DeFi has solved a really important problem, maybe even the most important problem to solve to date, and that is the capital allocation. So in DeFi, any any part of capital moves to a financial opportunity, a risk-adjusted financial opportunity, if that is available, and even more so programmatically. And this is a really important piece because it means that we have a liquidity layer that is transparent, auditable, programmable, living on chain that can be actually directed to any opportunity. So whenever there is new innovation on the borrow side, new collateralization, that liquidity can actually be channeled towards that direction. And I think that the sort of a next part is actually to try to figure out, now that we have this efficient capital allocation layer, which is DeFi, we sort of reach an equilibrium where we have a surplus of capital. That means that we've been able to attract a lot of liquidity into DeFi for various reasons. Because of the financial opportunities, DeFi in general has been seen more safer, more mature. There's more opportunities, more access points, more integrations. You can access Aave through an exchange like Kraken. You can access Aave through a fintech like WOP. And DeFi sort of is starting to go and become a backend for a lot of the fintechs and soon also to traditional finance. So the ability to vacuum liquidity is something that is really well achieved. And that also means that the capital is cheap in DeFi and waiting for new opportunities. And when you compare to traditional finance, I think, and I wrote about this earlier, is that in traditional finance, underwriting credit, lending in general, and capital allocation is a very multi-verse procedural, bureaucratic process where you have the paper layer, obviously different kinds of contracts and whatnot, and then you might have a platform and whatnot, and you have a lot of people involved. So from actually deciding on capital allocations, deciding on structuring a financial opportunity, if it's, for example, credit, approvals, committees, and so forth. And then finally, the actual financing, right? And this is surreal, right? Because if you go today to Aave, you can borrow in one transaction as long as you post a collateral. So the comparison between traditional finance and DeFi is really contrast. And I think what DeFi really does for traditional finance, it's going to disrupt the cost structure. And what it means is that DeFi won't win because the liquidity is cheap. The liquidity is cheap or can be cheap periodically. But what it really does over time is that it removes all those stages that you have and removes the manual work that is needed, the paperwork, the committees, and all that those manual components into codified, verifiable smart contracts. And that setup is the one that actually then reduces the cost to operate, the cost to lend, the cost to send payments, and so forth. So I think that the on-chain finance really just does things better. And the really proof for this is actually lending now against crypto native collateral, so Bitcoin, Ethereum, and which is the basis of most of the yield in DeFi. So how it works is that if you go to why in the first place lending protocols are born, because you couldn't go to a bank and give them Ethereum or Bitcoin and basically ask for a loan, right? So crypto audiences were unbankable. So you had basically DeFi that was emerging. You had also centralized versions with more of less transparency, and that sort of wasn't the prevailing option. The prevailing option was actually a transparent system like DeFi. And this happens in real time, and this can be also applied to all the credit in the world. And if you think about the particular focus point of today, which is the abundance assets, this is a huge opportunity. So I'm a big believer on DeFi native assets growing, and I think is going to be always the bread and butter of for example, Aave. But I also believe in RWAs. And RWAs, I kind of have a love and hate relationship, because I think that a lot of the RWAs that are created today are typically very liquid assets. They're traded in a venue that is highly liquid, and maybe those assets don't get that big of a value proposition when we bring them on chain necessarily, unless we're looking for new audiences to buy traditional financial products. But where I see the most exciting path for RWAs is to focus and put attention in this big transformation that is happening now with abundance and focusing on abundance assets. So AI and compute itself is a 10 trillion opportunity. Infrastructure in general is 15 trillion. Solar and storage is 15 to 30 trillion. And solar specifically is interesting because there's a lot of solar that is bankable. So you can go to a bank and actually get a loan against a solar farm in most cases. But batteries, for example, are too high on the technology curve that it's not bankable. And the cash flows are more volatile. And we're going to have similar assets for autonomous vehicles, solar-powered desalination plants, even space infrastructure, and that's its own sort of a scale and category. So this is a huge opportunity, and I think that the financial infrastructure that is able to support these assets is going to make a big difference. The same way how JP Morgan backed railways in the early days, backed Edison and backed Tesla and backed electrification and this whole transformation and industrial revolution. And the same is happening with abundance. And I think this is DeFi's real moment to shine, actually. And I think that here where DeFi from like economical perspective fits really well, because we have this surplus of capital, and now we have an opportunity to actually try to find these new use cases where DeFi can make a lot of sense, where you have assets that have high enough technology risk that might not be ready for banking, and getting there early. And also these assets has to be assets that are infrastructure and backing the future that we want to live in. And it's actually quite interesting because if you think about the infrastructure in general, it creates a strong sense of like a hard assets. I think that commodities in general is going to be a big part of everything that we're doing, because those are the ingredients to build a lot of the infrastructure. But I think that a financial future or financial security better established when we have assets that are based on infrastructure that rely on day to day, but also infrastructure that sets the humanity free. And I think why I did the comparison between the scarcity assets and the abundance assets in the first place was because the abundance assets are sort of changing the way we think about scarcity in the future. So if we have enormous amount of intelligence, we have very low cost of energy, we can go from A to B point at a very low cost. We have ability to work from anywhere. We have unlimited labor. We don't need to anymore to live in crowded cities. People will sort of start to actually work and live from anywhere at that point. So it sort of breaks the idea of scarcity assets such as real estate or commercial real estate and what existing financial world is backing, but also it questions even the way we lend to governments today and how they think about it. Because if you can live anywhere, maybe the governments need to start actually competing for citizens in the future. And I think as a collateral perspective, it's really interesting, and the opportunities. I want to sort of show you an interesting piece here is that when you think about infrastructure like Aave, we've always focused on this idea of like everything we build has to be verifiable on-chain end-to-end. So you can lend against ERC20 tokens, maybe ERC71s, assets, and that can be like loan obligations and whatnot. But we probably will go to a world where DeFi is in some ways a capital aggregation layer, and then allocating to different credit opportunities. And the way we designed the Aave v4, which is our latest iteration that is going to be live soon, very, very soon, is that we believe that DeFi should be used as a backbone to actually finance a lot of these opportunities. And in some of these opportunities, maybe tokenization is not even a big part of it. And this allows actually to manage finance not only at a lower cost basis, but also at a greater transparency. And the biggest risk I've always seen with RWAs is that a lot of the actual transparency is moving out of on-chain and going into RWAs, and it's harder to actually assess them. So there is a lot of tooling that needs to be built. There's a lot of services and a lot of infrastructure that we need to build to make RWAs viable for on-chain collateralization. And that is why I think now is quite an excellent time to being participating and building DeFi, and events like ETC is very valuable for actually creating ideas and brainstorming and meeting people, because we reach in DeFi to a place where we have a capital aggregation layer. So we have solved the supply side problem. And the next problem that we need to solve is that how we then allocate the capital. It might be abundance assets over long term. I truly believe that is a category that is very underbanked. But there is also other examples as well, which can be, for example, consumer credit, business credit around the world, and other opportunities. The key is to have a tooling and infrastructure around that really makes this model viable, and also ensures that the risk is managed accordingly and mitigated. And that is sort of like the key for the next evolution of DeFi. And what sort of we think is going to be interesting with these abundance assets is that it creates financial opportunity and yield that is backed by things that we rely on every day, because we have to use energy, we have to use water, we basically have to use computation, transport, and we have to rely also on space eventually. And this is a perfect collateral for DeFi and a perfect funding opportunity, as long as it's done in a very transparent way and risk is handled accordingly. And why this is an important topic is that DeFi has to have a meaning eventually. And the meaning is that if this transformation to abundance economy will take anything between 50 to 75 years, with DeFi, we will be able to accelerate that by anything between 10 to 15 years and bringing that to much closer for us. And that creates a lot of value and a lot of yield that can then be distributed as a financial opportunity across the world to every single person in a borderless, transparent way that DeFi is known for. So how I think about the actual market structure here. So I think one of the important things is to keep a shared liquidity model, which is what the Aave v4 is built for. So Aave v4 hasn't been built only to focus on existing DeFi opportunities and strategies. It's built to really back the whole financial credit space. And risk can be segregated while access to capital can be concentrated. And I could imagine that in Aave v4, there could be a sort of like a green hub where you have collaterals from, let's say, anything from solar batteries, desalination infrastructure, and that green yield can be distributed globally to users to access a better financial opportunity that is backed by abundance instead of scarcity. Yeah, I think it's a big opportunity, and obviously this is something that we're really interesting to tackle, and we already see that there's a lot of excitement around funding infrastructure. It's a big opportunity, and that creates a really new wave for DeFi. And I think that this mindset requires also to think broader than as of today. How do we access these opportunities? How do we underwrite in the right way? How do we partner with traditional finance or traditional lenders, traditional markets, and actually make this viable and safe and secure? That's, I think, yeah. Won't see my last slide. Yes, you see my last slide. But yeah, that's my talk today. So what I wanted to do in overall is to inspire you all to build something new in DeFi. And I think we have the infrastructure now. We have an incredible opportunity to actually bring the future that creates more and more opportunities for everyone. More abundance, more freedom, more intelligence, and create a really interesting world over the next decades and use DeFi to accelerate that. And hopefully you find this productive and helpful. And my last thing I want to say is that DeFi will win. Thank you.